This time last week, the S&P was trading down at 4,100. Now it's nearly 6% higher. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. What an incredible week it has been. Incredible gains for the S&P. What is it all about? Well, let's just take first things first. We've just had the latest non-farm payroll update from the US. And it came in lower than expected. 150,000 jobs created last month. The expectation was for 180,000. On top of this, the prior month's data was revised downwards quite sharply. So that suggests that the tightness in the labour market, that thing that the Fed were really fearing that might spur on inflation, is starting to loosen at last. On top of that, the unemployment rate it picked up to plus 3.9% after being 3.8%. And we had average hourly earnings expected to rise 0.3% month on month, came in at plus 2%, plus 0.2% I should say, suggesting that in fact those wage demand pressures are easing off. So this is all good news as far as the markets are concerned, because remember, mostly bad news is good news, and of course that is bad news for those who aren't in work and trying to get into work. But it takes a lot of pressure off the market. Bond yields as well. The yield on a 10-year Treasury note was over 4.9% at the beginning of the week. It's now 4.55%. That's a terrific downward move in yields, and that means a surge in bond prices. And what's that telling us? It's suggesting that as far as investors are concerned, they think the Federal Reserve is done with rate hikes. They think the Fed has done its job and that it's over now, and it's just a question of when they start cutting and by how much. Thank you very much for watching. I hope this was of interest. If it was, please like and follow, and best of luck with your trading. Goodbye.